Hello, fellow money enthusiasts. Today, we're diving into the piping hot world of cryptocurrency to dissect the launch of Pi Network's very own coin. Mark your calendars, folks, because February 20th, 2025 will be remembered as the day Pi Network finally spread its wings and took flight on the open market. This ambitious project, known for its unique mobile mining feature, has been generating buzz for quite some time now. They boast a massive user base, though the exact figures are a tad murky. Some claim a whopping 70 million users, but let's just say the jury's still out on that one. Regardless, Pi's foray into the open market is a significant event, and we're here to break down the first 12 hours of this grand experiment. Buckle up, because things are about to get interesting. Now, let's talk turkey, or should I say Pi. The million-dollar question on everyone's mind is, how much is this digital Pi actually worth? Well, the answer, my friends, is about as clear as a mud pie right now. See, in the shadowy world of pre-launch trading, Pi Network IOUs were changing hands for a cool $61 to $70. But those were just whispers in the wind, promises of riches yet to come. The real test is what happened when Pi hit the actual exchanges. Did it soar like an eagle or plummet like a lead balloon? Stay tuned as we track the wild ride of Pi's opening price. Price is just one piece of the puzzle, folks. To truly understand the initial impact of Pi Network's launch, we need to keep a close eye on trading volume. Think of it like this. Price tells you how much a single slice of pie is going for, but volume reveals the size of the entire pie. High trading volume usually means there's a feeding frenzy going on, with eager investors gobbling up Pi coins like they're going out of style. Low volume, on the other hand, might signal some hesitation, a lack of appetite for what Pi is serving. So, is Pi the hottest dish on the crypto menu, or are investors politely declining seconds? Let's find out. Alright, let's say you're convinced that Pi is the next Bitcoin and you're ready to throw your life savings at it. There's just one tiny problem. Where do you actually buy this elusive digital currency? That's where exchanges come in, my friend. These are the platforms that act as marketplaces for buying, selling, and trading cryptocurrencies. The number and reputation of exchanges that list a new coin like Pi can make or break its success. So, did Pi manage to snag spots on any of the big league exchanges, or are we talking about a game of virtual penny stocks? The answer, my friends, is just a scroll away. Section 5. The people have spoken. Pi community reactions. Cryptocurrency isn't just about numbers and charts, it's about people. Behind every coin, there's a community of passionate supporters, skeptical onlookers, and everyone in between. To get a real feel for Pi's launch, we need to tune in to the court of public opinion. Are Pi Network's millions of users doing the digital equivalent of a victory dance, or are they drowning their sorrows in digital tears? We'll be scouring the depths of social media, from Twitter rants to Reddit forums, to gauge the sentiment surrounding Pi's grand debut. Section 6. Is Pi actually working? Early network activity. Okay, we've talked price, volume, exchanges, and community buzz. But there's one crucial element still missing from our Pi Network puzzle. Is this thing even working as intended? To answer that, we need to look beyond the hype and examine the actual network activity. Think of it like this. Imagine a bustling city with shiny new infrastructure. But are people actually using the roads, bridges, and buildings? That's what we need to find out about Pi. We'll be monitoring the number of transactions happening on the Pi blockchain, which will give us a glimpse into the real-world adoption and usage of this freshly minted cryptocurrency. Is Pi a ghost town, or is it the bustling metropolis of the future? Stay tuned. Section 7. Pi in a nutshell. From mining on your phone to Mainnet launch. Now, for those of you who are late to the PI party, let's rewind a bit and explain what this whole Pi Network thing is all about. Imagine this. You're just scrolling through your phone, minding your own business, and suddenly you realize you could be mining cryptocurrency without breaking a sweat or your phone's battery. That's the basic premise of Pi Network. They use a unique mobile-based mining system that relies on something called the Stellar Consensus Protocol. It's not your typical energy-guzzling proof-of-work system like Bitcoin. It's more about trust and participation. Pi Network has been through several development phases, from beta testing to a closed mainnet, and now finally, the big leagues of open mainnet. Section 8. Counting heads and coins. The question of Pi's user base and value. Remember those impressive user numbers Pi Network keeps throwing around? Yeah, about that. They often boast about having millions of users. But what does that really mean? While they claim to have a massive following, the actual number of active, verified users is a bit of a head-scratcher. Many people download the app out of curiosity, but never engage further. See, there's a difference between downloading an app and actually going through the Know Your Customer or KYC verification process. KYC is crucial for ensuring that users are who they say they are. And when it comes to cryptocurrency, verification matters. A lot. Without proper verification, the network's integrity is at risk. It's about preventing fraud, money laundering, and all sorts of shady shenanigans. These measures are essential for maintaining trust in the system. So, are those millions of claimed users actually verified and contributing to the network? Or are they just numbers on a screen? That's a question that needs some serious answering. The difference between active and passive users can significantly impact the network's value. Plus, there's the issue of value dilution. When too many coins are in circulation, each coin's value can decrease. Pi Network doubled its circulating supply to a whopping 5.56 billion coins. This massive increase raises questions about the coin's future value. And to top it off, there's no clear cap on the total supply. You do the math. Without a cap, the potential for inflation is high, which could further dilute the coin's value. Section 9. Can you trade your Pi for a pizza? Liquidity and centralization concerns. Let's say you've mined enough Pi to make a digital dragon jealous and you're ready to cash in and buy that private island you've always dreamed of. But before you start packing your bags, there's a lot more to consider. Well, hold your horses because there are a couple of speed bumps we need to address: liquidity and centralization. These aren't just minor inconveniences, they can make or break your crypto dreams. Liquidity in the crypto world is all about how easily you can buy or sell your precious coins without drastically affecting the price. It's like trying to sell a rare collectible. If no one's buying, you're stuck. If there aren't enough buyers or sellers in the market, you might be stuck with your Pi for a while. Imagine having a treasure chest full of gold, but no one willing to trade for it. And those pre-launch IOU prices? They might look promising on paper, but yeah, they don't mean much in the real world until Pi proves it can actually hold its value on the open market. It's like having a coupon for a product that hasn't hit the shelves yet. Then there's the issue of centralization. This is a big one. Right now, the Pi network team has a lot of control over the network. This level of control can be concerning for those who value decentralization. There aren't any independent validators, which raises some eyebrows in the decentralized world of cryptocurrency. Independent validators are crucial for maintaining trust and security. It's like having one chef who controls the entire menu, the ingredients, and the cooking process. While this might ensure consistency, it stifles innovation and competition. Don't get me wrong, that chef might make a mean digital pizza, but it's always good to have some competition in the kitchen. After all, variety is the spice of life, and the same goes for the crypto world. Section 10, Big Data, Big Brother, and Pi navigating privacy worries. Okay, let's talk about the elephant in the room, privacy. Pi Network's mandatory KYC verification and ad-driven model have raised some red flags in the privacy department. I mean, we're talking about a company that requires you to hand over your personal information before you can even start mining their digital currency. And then there are the ads. Now, I understand that everyone needs to make money, but when it comes to personal data, things can get a little creepy. It's like inviting someone over for dinner and then asking them to fill out a detailed survey about their financial history and dietary preferences before you let them have a bite. A little invasive, wouldn't you say? Section 11. Mainnet, a giant leap or a small step for Pi. The launch of Pi Network's open Mainnet is undoubtedly a significant milestone. It's like that moment when a fledgling bird finally takes its first solo flight. But is Pi soaring to new heights, or is it just flapping its wings furiously without really going anywhere? That, my friends, remains to be seen. The open Mainnet allows Pi to spread its wings and potentially attract more users, developers, and investors. It's a chance for Pi to prove its worth and show the world what it's truly capable of. But it's also a test, a trial by fire in the unforgiving arena of the cryptocurrency market. Section 12. Hold your horses. A word of caution in the wild west of crypto. Now before you all rush out and invest your life savings in Pi, let's take a deep breath and acknowledge the elephant-sized risk in the room. It's easy to get caught up in the excitement and potential of a new cryptocurrency, but it's essential to remain grounded and cautious. The world of cryptocurrency is still very much the Wild West, full of promise and peril in equal measure. Just like the pioneers of old, crypto investors face uncharted territories and unpredictable challenges. Market volatility can be extreme, and fortunes can be made or lost in the blink of an eye. Pi Network, for all its hype and potential, is still a relatively new and untested player in this high-stakes game. While it offers an intriguing proposition, its long-term viability remains uncertain. The technology and community behind it are still evolving, and it's crucial to keep that in mind. Remember those concerns we talked about? Inflated user numbers, value dilution, liquidity issues, centralization, and the potential for regulatory scrutiny. These are not just minor inconveniences, they are significant factors that could impact the future success of Pi Network. Privacy worries. Those are not just minor inconveniences, they're serious red flags that warrant caution. In a world where data breaches and privacy violations are becoming increasingly common, the security of your personal information should be a top priority. The road to cryptocurrency success is littered with the digital carcasses of projects that promised the moon but crashed and burned before they even left the atmosphere. Many projects have failed due to poor planning, lack of funding, or simply because they couldn't deliver on their promises. I'm not saying Pi Network is destined for the same fate, but it's crucial to approach this and any other cryptocurrency with a healthy dose of skepticism and a well-researched plan. Always do your due diligence, understand the risks involved, and never invest more than you can afford to lose. The key to navigating the Wild West of crypto is to stay informed and cautious. Section 13, Disclaimer, not your financial advisor. And now for the obligatory disclaimer, I am not a financial advisor, and this is not financial advice. I'm just a guy who enjoys dissecting the often absurd world of cryptocurrency. Any investment you make, whether it's in Pi, Bitcoin, or your Uncle Bob's ostrich farm, should be based on your own research, risk tolerance, and sound judgment. Section 14, like, subscribe, and spread the crypto love. If you enjoyed this deep dive into the wild world of Pi Network, be sure to give this video a thumbs up, subscribe to our channel for more crypto shenanigans, and share this video with your friends, family, and that neighbor who's always asking about cryptocurrency. Until next time, stay informed, stay skeptical, and may your portfolios be evergreen.